Welcome, everybody. So we are tuned in to a session that is strictly dedicated to helping you build the step-by-step strategy you need to pick the right dividend-paying investment. Now, this is going to be an interactive session. So one, get your notebook out. Comment notebook in the chat if you got your notebook. Go get your notebook and pen because I'm going to cover key things you want to consider when picking your dividend-paying investment. So that goes for REITs, it goes for ETFs, it goes for stocks. It doesn't matter. If there's a company that's going to be paying you passive income, there are core things you want to look for, you want to consider and know before making a decision, and even to keep the companies that you have. Because it's one thing to buy a company that is paying you passive income, and it's another thing to keep a company based off of what they do, who they are, and the income that they're paying you. So during this session, what we're going to do is one, feel free to ask your questions in the chat because I'll check the chat periodically to be able to answer the questions. But what we're going to do is I have slides that I want to share, nothing too detailed, but very high level. High level where this is what you're going to write down to make sure you know and understand. What we're going to do is as we go through each of these slides, I'm going to share my screen and I'm going to walk through certain companies and we're going to look these things up together. So while I'm doing it on the screen, I'm going to need you to pick up your phone, utilize your computer, open up another tab while you're tuning into this session to be able to do your research. Now, what this session is going to cause you to do is one, it's going to cause you to reevaluate the companies you already own. The other thing it's going to do is going to help you evaluate companies you are considering. So if you do not get any type of dividend income, passive income paid out to you within your investment account, this is the time to understand how we can get this done, but what to figure out when it comes to building that income. If you are brand new and you are tuning in, you must open a brokerage account. The easiest account to have where you can take the money out when you want, when you can put as much or as little as you want to open a brokerage account. A lot of members inside of our passive income bootcamp inside the Wealth Builders community, our REIT Accelerator, thousands of our members, these are the accounts that they're using. And this is for those of you who are new. Fidelity, Charles Schwab, Vanguard, or E-Trade. If you have an account that is not with them, it does not mean it's bad. It just means that a lot of the members, the thousands of people inside of our Wealth Builders community app, that is not the most popular account that they're using. With these accounts, a lot of the things we're going to talk about today, you are able to find just in your brokerage account. But I'm also going to give you key websites that I like to utilize to research my investments to decide if these are stocks or REITs that I want to keep, stocks or REITs that I'm thinking about considering. But the ultimate goal when you're looking for dividend paying investments is passive income. I want everybody right now, comment in the chat, passive income. We are not looking to flip our money. We are looking to build an income that can take care of us. We are looking to preserve the money that we are making to ensure that we never have to work again a day in our lives. Now, will it take time to build this income? Absolutely. But I'd rather you get $50 a month than look up and have no money coming in every month. But if you can get $50 in a month, you can get to $500. You can get to $5,000. And the steps that we're going to cover and the things we're going to highlight are the core things you want to consider when picking the investments that are going to give you the passive income you're looking for. Now, just want to make sure, can everyone see my screen? It should say important disclaimer at the top. Can everyone see my screen? All right, so if you see me look to the right, that means I'm over here looking at the chat, of which I will look at periodically to make sure that I look at the questions and the comments that you guys have. During this session, you're going to see people in the chat talking about different companies. You are going to see me talk about different companies. This session and everything that we talk about and the companies we highlight for educational purposes only. I am not making any investment recommendations. I have no problem telling you guys what I invest in, but I am a 36-year-old woman who has no children, who has risked whatever the word is, it all to build Amplify. So I have a very high risk tolerance. Some of you tuned into this session are in our golden society where you are over 50 years old, right? You're not with the riffraff. You see, you're not with the ups and downs, the crazy presidents, the movements in the market. That might not be what you're into, and that's okay. I am. I like the ups and downs of the market, right? I find opportunities all the time, no matter what's going on in the world, whether it's positive news or negative news. So while I may invest in a certain company, doesn't mean that it works for you. We're going to highlight the core things you want to consider when picking your investments. All right. So everything we talk about is for educational purposes only. I am not making any recommendations. I am not a licensed financial advisor. I am the wealth builder, the financial educator that is creating this company called Amplify to change your life and your family's life, to give you the tools that we did not learn in the school system. Now, when it comes to what you are investing in, before you make a decision on what you are owning, you have to look up the stock price history. So let's say you're on the internet, right? And you are watching a video and someone's talking about a company, and they might say buy it. They might just be talking about it. That doesn't mean you go out and buy it. The first thing I do if anyone comes to me with an idea, of which I don't even care about ideas, if I'm considering any company, is a stock price history. The easiest way to find the stock price history is to type in the company's name and type in stock. So I want everybody right now to pull up your device, type in a company name that you are considering or a company that you own, and go look at the stock chart. And what I'm going to do is I'm going to pull up on my screen a stock chart of a company. And I'm just picking random companies. There's no method to my madness. So here's what I'm going to share my screen right here. So that everybody pull up, type in the company that you searched. Just pull up the stock price. Type in the company of the stock that you looked up. It could be one you already own, one you are thinking about owning. I don't care if it's a REIT, R-E-I-T, if it's a dividend stock. Okay, so that's all I want you guys to do. Pull up the chart. Now, the first thing that I do, the moment I look up a stock, can everyone see my screen? Comment yes in the chat. All right, good. All right, cool. The first thing I do when I look at the stock chart, the first thing you naturally are going to see is the stock price. Here's what you don't do. You don't let that stock price dictate your decision on if you're going to buy or sell the stock. Some of you may look at a stock price and say, "Ooh, that's a little expensive." For example, I'll give you an example right now. Let's take a look at this stock right here. Meta Platforms. At some point, you logged into Facebook or logged on to Instagram. You see 719. You know what most people do? Ooh, that's expensive. No, honey. Not when you are almost a $2 trillion company. Compare 2 trillion to 719. We're talking about one of the biggest companies in the world that I love and wake up to every day. I'm not even going to lie. Now, I'm not saying you go out and buy Meta Platforms, but I am telling you, no decision should be dictated by the cost of something. Because what I want you to understand is, what if this stock in a few years is 3,000? Think about it. 3 years from now, this stock is 3,000. Is 719 an inexpensive price or an expensive price? Comment in the chat. So if in fact you see this price right here, you don't think about the price, you think about the value. When someone goes into Chanel, are they considering the brand, the value, or the cost of the bag? Or someone decides to buy a Mercedes, right? Do not allow your reality to dictate your financial future. Here's what you do instead. If there's a stock that you do like that you may not be able to afford, you utilize your brokerage account and you buy a fractional share, which is why we talked about Fidelity, which is why we talked about Charles Schwab. Because if you only have $100, then you can buy $100 worth of that stock or REIT or whatever it is you're looking for. So if at any moment you look at a price and say, "Ooh, that's expensive," no. Is it expensive because it is overpriced and it's not as valuable? Or is it overpriced because your bank account balance is dictating your financial future? Because if we all let our current financial situation dictate our future, what's the point of dreaming? If your current reality is the only place that you're looking, why would you believe you can go any further if all you're looking at is what you've been able to create today? What got you here won't get you there. So if you want the company, add it to your list, but do not let the price of any company dictate whether or not it's a company that is valuable in the next 3, 4, 5, 6, 7, 8, 9, 10 years. Because let me tell you this, look at the bottom of this stock chart right here. You see where it says 52 WK low? That means 52-week low. That means within 52 weeks, the lowest this stock got was 442. The 52-week high is the highest the stock got in 52 weeks. So within a year, ladies and gentlemen, you literally could have almost doubled your money, maybe like a 60, 70% return on your investment if you got in around that 400 price point. So the point that I'm making is money was made buying this stock when it was 400. And I bet you people said, oh, it's expensive. We look at the cost of something, yet we don't look at the investment in something. So when you're buying a company, it's not a cost. It's not an expense. It's an investment that you're looking to get a return on. Because 442 is not cheap compared to the majority of stocks that are traded on the stock market. But I would have rather got in at 442 than 719. And I would have rather got into Amazon at 719 before Amazon turned to a $3,000 stock years ago. Now, could the stock split? Possibly. But we're here today. So that's one thing I want you to look at. The other thing I want you to look at, let me go back to, I think I was I looking at Verizon? Let's look at Verizon. Verizon at this moment is $43. When I pull up a company, you see what this chart pulls up? By default, it's going to show you what it did today, right? Whether it's the weekend, the weekday, or if it's the weekend, it shows you what happened the previous business day. The stock market was open. This shows you what happened today, right? Let me ask you a question. If I asked you to determine your true value of who you are and your potential, and all I did was take a crystal ball and look at your life today, is today a clear depiction of what you're capable of? And be honest, if I look at your life today, is that a clear depiction of who you are as a person if I were to invest in you? Okay, so Milton says no. I'm seeing absolutely not. So if I'm looking to invest in you, I'm not looking back 24 hours. I want to know who you are. I want to get to the root of you. I want to know what you've been doing over the years. If I'm looking to invest and I want a return that I want to satisfy me throughout my entire lifespan, put me in a better position, I want to pick the best players. Let's take it a step further because I'm the CEO of Amplify. If I'm looking to hire somebody for Amplify, I'm not looking at what you did in 24 hours. I'm looking at your whole resume. I want to see your track record. And if you get interviewed by me, ladies and gentlemen, we going back to your childhood. I want to know how you were raised. I want to know what you struggle with. I want to know your biggest accomplishment. I need to know if you're willing to take this ride with me, build this big old dynamic game-changing business with me, and are you built for this? But I'm not gonna just ask you what you did yesterday. I need to know your life story. So if you don't know the life story of a company that you want to change your family's financial future, it shouldn't be in your account. One way you can do that is not just looking at what it did for the day. I like to look at least what did you do over the past 5 years? So if we look at Verizon, what do we see when we look at the chart of Verizon over the past 5 years? Comment in the chat. What do we see? What do we see? Just looking at 5 years. A better picture than 24 hours, but 5 years. What do we see about Verizon in 5 years? Comment in the chat. All right, I'm seeing Jamil says the price went down. Emmanuel says it's on its way up. So do you see? Now, here's what I like to look at personally. This is me. I like to look at how a company performed around the pandemic. Because whether you like it or not, ladies and gentlemen, the market will drop. There will be a crash. The world is not going to end. Just like you have down days, so do your stocks. The market is ran by humans. Companies are ran by humans. Customers are humans. The investors that buy the stock are humans. We all are up and down. We are humans. So to come into this game and to expect only positive, you're setting yourself up for failure. Coming into this game expecting only green, you're setting yourself up for failure. Until you can show me that you are positive every single day of your life, don't you dare put that expectation on a company because you want to make money. That's not how this goes. So we can also look at the max. Now, if we look at the max meaning the day Verizon went public, the first time the world could own stock in this company, how has it performed? And if you can drag the mouse, we're talking about 1985. I wasn't even born yet. 1985. A lot has happened since then. But let me tell you one thing about a Verizon. They pay out $11 billion in dividends, which means they have enough money from all their customers to pay all their bills and to pay all their investors. $11 billion in 365 days. Now, I've never seen $11 billion, but Verizon has, and they're willing to give it out. Companies are giving out millions and billions. So don't you sit here and tell me you are afraid to buy a stock in the stock market when companies are giving out billions, ladies and gentlemen. So this is just an example of what you want to consider when looking at a stock chart. Now, it's not the only thing, but you can't just hear someone say a company. That's like someone saying, Ashley, go hire this person. I need to see their history. I need to do a little research. The same thing if you decide to marry somebody, you want to do your due diligence. You want to make sure this is the right fit for you based off of what works for you. Some of you may see Verizon has been down. Over time, Verizon has been up. Take these things into consideration when picking your companies. Now, let's keep going. The next thing I want you to consider is the dividend yield. Write this down. Remember, we're talking about passive income now. The dividend yield you can find on a stock chart, at the bottom. It is the percent. The dividend yield is the percent you are going to get every year for every share you buy. You want to consider companies that are going to pay you between 4 to 17%. You might find some that are lower. I'm not sure if you're going to find any higher than 17%. But once you hit double digits, you better really do your research. But the sweet spot is between that 4 to 6%. That's your sweet spot. Now, let me tell you what people say and what you're going to think. When you do the math, ladies and gentlemen, you are going to see getting 6% of $44. That's not a lot of money, right? But when you invest $100,000 over the course of your life, when you invest $250,000, some of you right now have been working for years. Some of you have some retirement accounts at your job. While it might not seem like a lot, 6% on $1 million is a lot, just like it is on $100. So when you see I might not make a lot right now, I would rather you get 6% on something than 0% on nothing. Let me tell you when you get 0%. Every time you buy something on Amazon, every time you go shopping, every time you buy food, every time you walk outside and pick up your cell phone and make a phone call, every time you scroll on social media, all of those things are guaranteeing you're decreasing your net worth and increasing somebody else's. Now, I'm not telling you to not buy things. I shop on Amazon every day, literally every day. I get on social media every day. But I own stock too. I spend money and I invest money. I spend money and I get paid dividends. Many of us have mastered the art of spending. Yet we have no one paying us unless we have to work. Now, I run a company. I work for Amplify. If Amplify does not pay me, I cannot sustain the life I've created, which means I still have to show up to work because I live a very nice life and I want a bigger life. But I want to make sure that when I'm in my golden society era, when I'm in that 50 and over phase of my life, when I am 60, when I am 70, when I am 80, when I am 90, I can still live the way I want to live. How many of you want to live the life you want to live and you want to sustain that? You have to build that. But in order to build, you have to lay the first brick. That's why our app is called the Wealth Builders Community. You're not just going to walk into a ready set, everything is just set up for you. That's what we're creating for our kids. But if we weren't blessed with that, ladies and gentlemen, you have to lay the first brick. You know what the first brick is? A 30-cent dividend, a 60-cent dividend, a $30 dividend, a $60 dividend, a $90 dividend. You have to get comfortable with laying bricks. I know you feel like you're behind. I know you're mad at the system. I know you're probably frustrated with your family, everybody that's asking you for everything. It is life. The life that you are undefeated at life right now. You have tackled every single battle that has come your way because you are still here. I'm pretty sure you can lay the foundation to build a dividend portfolio, to create more money, to put your family in a better position. But that can't be done if all you're talking about is, oh, this isn't a lot of money. That can't be done if all you're talking about is, I feel behind because I feel like I'm too old. You want to, how many of you, and be honest in the chat, how many of you are over 50 years old and at some point of you being inside of this Amplify platform have said to yourself, I feel like I'm behind? Comment me in the chat if you are over 50. So I'm seeing Shirley, Jane, Mel, Titus, Yolanda, Carmen. Would you believe me if I told you that 36-year-old Ashley feels like that every day? 36-year-old Ashley. Would you believe me if I told you that 30-year-old Ashley felt like that? 25-year-old Ashley felt like that. 16-year-old Ashley felt like that. When have you not felt like you weren't where you wanted to be? Think about it. It's not your age, ladies and gentlemen. Because if you think that now, you are the same you. We're never going to be satisfied. We can be a little bit more grateful, but I have always felt like there's more to do. I have always felt like I want to be working harder. But here's what I do. We need to start looking at the gain versus the gap. Let me ask you a question. This is going back to my 50 and over crowd. Are you a lot smarter, wiser? Do you make more money than what you did at 10 years ago? 10 years ago, do you make more money? Are you smarter? Are you wiser? Have you learned and went through some things that have given you the clarity that you need to prepare you for tomorrow? This goes for everybody, to be honest. I don't care what your age is. So based off of your past performance, is it possible that in the next year, 2 years, 10 years from now, it's a strong probability you're going to be making more? You are going to be more wiser. You are going to have more clarity. You are going to be stronger. So how about we focus on that? Because 10 years ago, ladies and gentlemen, somebody just sent me a picture of me 11 years ago. We had just opened our financial advisory office. 10 years ago was 2015. I was a financial advisor and I had made, I think, about like 80,000 that year. 80,000 that year. Do you know that I am in the process of hiring 7 people? And more than 80% of the people I'm hiring, I'm paying them way more than 80,000. I made 80,000 in a year, and I'm trying to hire 5 people where I'm paying them over $80,000. This isn't my money. This is the talent that I'm looking for. We're talking about 10 years ago. I can't pay our bills with $80,000. I can't make payroll with $80,000. This is the same Ashley that 10 years ago still felt like she had more work to do. So give yourself the benefit of the doubt that you are doing your best, that you are not who you used to be. Now, we have a problem if 10 years ago, 1 year ago, 2 years ago, you're the same exact person. We got to have a separate conversation outside of this session. But if you have pure evidence that you are a different person, you have grown, you have made more money, then that is enough for you to realize it is possible for you to do better. So please don't sit here and feel like you have to rush this wealth building process. You didn't rush through life to become the person you are today. Parents, you didn't rush through life to be the parent that you are today. You had to learn, you had to go through a lot of things to be the best version of you. So don't rush this money process. You can't create something everlasting and think you're going to build it in one day. It's not possible. Now, let's keep going. The next thing I want you to consider is the dividend history. History, write this down. You now know, remember the 4 to 17%. That is the percent you're going to get every year for every share you own. So you want to know what the dividend is? That percent times the stock price. That's what you're going to get every year for one share. Might not be a lot if you only buy one share. But you looked at that yield and now you want the dividend history. So the same way I said if I hire people, I want to know your history. I want to do some facts. I'm going to call some references. I'm searching all your social medias. I'm digging deep. You're going through about 5 interviews at Amplify. I want to know because I want to see what you've been capable of. Because I want to be impressed by what you've done if I want to believe in what you can help us create. I want you to be impressed by what these companies have done in their past to at least give you some confidence in knowing what they can help you create for your financial future. So here's what you want to do. There are quite a few places where you can find a company's dividend history. If the company is traded on the NASDAQ, you can go to NASDAQ dividend history and see the company. You can always find a company's dividend history on their investor relations page. The investor relations page is the company's website where investors go. So you can go to Amazon.com, right? And that's where you shop. But Amazon's investor relations page, that's where you go when you're an investor or potential investor. That's where you go to see all their financials. That's where you get all the news. That's where you get all the tea. That's where you get everything about that company. Because if it's a stock that is traded on the stock market, that means it's a public company. Public means the public is in their business. It means you can see all the information about the company because it's public knowledge. So everything you need to know and see can be found on that investor relations page. You can also, nowadays with AI, all type of stuff, you can honestly just type in the company stock dividend history in Google. The links are going to pop up. So I want to show you an example because when you look at a company's dividend history, you want to make sure it gives you confidence in their ability to financially take care of you, right? You want to show some stability. You want to see a level of comfort, like, hey, if I'm gonna put my time, money, and energy in you, I need to make sure what you have done and what you are doing can support what I want. And that's important when you look at these companies. So let me pull up, let me see, I'm gonna pull up a company's dividend history. All right, here we go. Let me pull it over here on the screen. So let me share my screen with you right here. All right. So here's what I did. I said, let me look at AT&T, right? We're talking about one of the top, if not the top telecom companies in the world. So I went in, typed in AT&T dividend history. I went to their investor relations page. Here's the stock information. Here's the historical common dividend data. Here's the year. So far, AT&T has made payments on May 1st and February 3rd of 2025. The record date is when you were on record to own this company for you to receive that payment. That's when they stated in the outline, this is what we're going to pay. This is when you're going to get, this is what we're going to pay. And this is who we're going to get it paid to. Here's the amount. So see the amount. They paid out almost 28 cents each quarter for every share that people own. So if you owned one share of AT&T, you would have gotten 28 cents for every share you owned. Now, that might not seem like a lot, but remember, this is within 90 days and it's for one share. Do you know that there are people who own 100,000 shares? 200,000 shares. I remember being on Wall Street and our clients owned hundreds of thousands of shares and they lived off of this money. I want everybody right now in the chat to comment, how much money do you want to live off when it comes to your dividend? How much money do you want to live off when it comes to your dividend? Comment in the chat right now. Comment in the chat right now. Comment in the chat right now. All right, I'm seeing $10,000. I'm seeing $4,000. Okay, $10,000. Now, when you pull up the dividend history, here's what you need to look at. The history. So just by looking at 2024 and 2025, what do we see about AT&T's dividend history? What do we see? We see when they made the payment. The record date states when you're on record to own this stock, you're entitled to receive the money on this payment date. This is the amount you're going to receive. All right, so I'm seeing consistent. It's steady. It's the same. Okay. Let's keep going. Let's look at 2023 and 2022. Right here. Hold on. Let's look, here we're in 2023 and 2024, in summer 2022. What do we see about AT&T's dividend history? What do we see? Talk to me. What do we see? What do we see? It's the same. It's steady. All right, now let me ask you a question. So that's been over about 3 years. Let's go deeper. Now let's go to 2022, 2021. Now what do we see? Do we see any changes? Do we see anything different? Talk to me. What do we see in 2021, 2022, 2020? What do we see on the screen? What do we see? Okay. All right, so we see, okay, wait. All right, stop for a second. I'm seeing higher dividend cut. It was lower. In one sentence, what does this screen tell you? One sentence. Write it in the chat. What does this show me? One sentence. It was higher in 2020 and 2021. Okay. They dropped their dividend amount. The payout went down. Okay, let me tell you what I see. I see what happened to AT&T for their dividend to be cut in half. That's almost half, ladies and gentlemen. That's almost half. Now, let me put that into perspective. Let's say I'm Ashley Marie Fox. I am Ashley Marie Fox, and I bought AT&T stock. I worked so hard building my company, Amplify, right? We built this big old company. It's worth $3 billion. And, we cash out. And I'm not spending all my money, but I invested it. And I invested some of it in AT&T. Not all, some. And now I'm not touching the money, the principal I had. I'm living off the dividends. And let's say, because we're going big right now. Comment, I'm going big. Comment, we're going to go big. I'm living off $500,000 in dividends from AT&T. Meaning, those 27-cent shares, those 52-cent shares, I owned enough, and this, let's say in 2021, that 52 cents per share, I owned enough shares that 52 cents per share altogether paid me $500,000. So envision, I want everybody to envision, $500,000. And then I get word that they're cutting the dividend in half, which means my $500,000 in passive income goes to $250,000. As someone living off the dividend, let's just say you worked all these years. You done took every boot camp in this app. You done learned, you invested, you done put your hard-earned money, and you've been living off these. Matter of fact, wait. Let's go deeper. Let me go back to the screen. Let's go back to the screen. Let's go deeper, ladies and gentlemen. Look at this. It was 51 cents, 50 cents, 49 cents, 48 cents. Let's go all the way to 2010. It was 42 cents a share. Then it went up to 43 cents. Then it went up to 44 cents, 45 cents, 46 cents, 47, 48, 49, 50, 51, 52. AT&T is rolling right now. Every year, they're giving you more money, and you don't even have to work at a company. Every year, I'm making more in income than the previous year. And then May 2022, my $500,000 that had been increasing since the previous years, it's been going up. I finally got to $500,000, and they drop it to $250,000 because they cut the dividend. Mind you, I don't work at the company. I just own the stock. The check's clear in my brokerage account. I don't do anything. I'm living my happy old life. I done built my company. We done cashed out. I'm about 50 years old chilling. My income drops to $250,000. If that is you during retirement, how do you feel? How do you feel? And be honest. I want to see the comments. How do you feel? We're about to fall out. Okay? I would have to fire them. Time to diversify more portfolio. Devastated, outraged, drop you, defeated, worried. Why do you feel defeated? You don't work at AT&T. You can't control that. This is a company that makes money, pays their bills, and shares their profit with you. That's what a dividend is. So let me tell you what I thought, because I actually owned AT&T all those years. I said, oh, what's happening over here? Why do you feel the need to cut my cash flow as well as all? It's not just me. We're talking about millions of people. They changed their business. They cut back. They removed some divisions. They made some business decisions, which I respect. But I bought you for the cash flow. You cut my cash flow. I gotta trade you now. I gotta find another player on my court. So when you look at the dividend history of a company, here's what you look for. Go back 10 years. Matter of fact, go back to 2008 when it was another recession. Look at what happened. Here's what you might see. Consistent income dividend increases. That is a good sign. You might see some. Also, we didn't have to do this because AT&T never missed a dividend payment. Sometimes instead of seeing 4 payments a year, you might see 3. You might see 2. So imagine that if they skipped a payment, sometimes that happens. During the pandemic, some companies cut their dividends. And again, it's nothing to do with you. It has to do with their business. Things happen. I remember Delta cut their dividend. Nobody was flying on a plane during the pandemic. Rightfully so. But when you are leaning on these companies to survive, to live off, we don't play those kind of games. There's no loyalty in the game of wealth. It's the players on your court that's going to take care of business, take care of you and your family, or they got to go. You don't have to like the company. You don't have to enjoy the CEO. Like, I don't care. My family's legacy matters way more than my feelings towards any CEO or any business. If I feel like it's going to take me to where I got to go and I'm okay with it, sign me up. But the moment the game changes, like a dividend cut, now I got to do some reevaluating. So when you pull up the dividend history, look for consistency. At least pay me the same amount. At least. But the good ones, ladies and gentlemen, they increase the amount. Pay attention to drops in dividends. And don't forget, you're going from the oldest year to the most recent years. So start 10 years out and work your way up to see, did they increase? Did all payments clear? All of that is public knowledge. Same way they want to look and see if you made all your credit card payments, I look to make sure they made all the dividend payments. Even during rough times, pay attention to 2020. How did this company handle 2020? How are they adjusting now? So these are things you take into consideration. You're never going to get, the only way you're going to see like an A+ is if it's a Dividend Aristocrat, of which AT&T used to be a Dividend Aristocrat. And that is a company that's been paying out dividends for 25 years, never missed a payment, and they increased their dividend. AT&T used to be a Dividend Aristocrat. People used to buy AT&T because they had a reputation of always increasing payments. That's why we kept seeing it increase by 1 cent every year. That's a big deal when you own thousands of shares of a company, ladies and gentlemen. So those are things you want to consider when looking at the dividend history. Now, if I'm being honest, there are some REITs that I own, that I know some of you own, that if I looked at that dividend chart, they done cut some dividends. That doesn't mean you have to sell it. You can decide what works for you. Every company is not an aristocrat. Every company does not always cut their dividend. Every company is not always up. Remember, companies are ran by humans. You aren't always up. When I remember running Amplify, and if you looked at our financials, we're like skyrocketing. Like we're freaking killing it right now. But when my dad died, 6 months was like this. And then we killed it again when I came back. But again, life happened. It's not that we were a bad company. Things changed with the CEO and what happened in her life. So these are the things that you see and read on the internet. You can go look up articles from the moment AT&T changed their dividend. They'll tell you exactly why they did it. Because AT&T owes an explanation to the public because they're publicly traded. And these are things you want to consider. You are not going to find a perfect company. You're not. No company is perfect. But that's why it's important when we talk about in the app. That's why it's important to constantly learn the language of money. You can't own a stock and not know what's going on at least every quarter. If you're paying attention to your children, you're paying attention to the money in your bank account, pay attention to your stocks. This is your life we're talking about. And trust me, if you don't want to pay attention to your money, give it to me because I will gladly pay attention to everybody's money in this session. Gladly. All right, next. You also want to take into consideration, is my screen up? I just want to make sure can you guys see my screen? Okay, cool. Dividend growth. Did we see there was a period of dividend growth with AT&T? We saw some pivots. Now, AT&T cut their dividend, but when they cut it, they have not increased it. Now, it's not that they won't forever, but I like to watch. AT&T, when are you going to increase the dividends now? I want some extra money. This is money this is like getting a raise from just being an investor. You don't work at the company, yet they're wanting to pay you more. AT&T has a reputation. They got to rebuild now. They went from being a dividend aristocrat to cutting their dividend almost in half. Whoo! And you know what happened to that stock? Take a guess what happened to that stock. The moment they cut the dividend, take a guess what happened to AT&T stock. Take a guess. Can anybody take a guess? It dropped. It dropped. You know what it dropped, ladies and gentlemen? 50%. You know why it dropped, though? Now, let's dig deeper. Why did AT&T stock price drop? And go basic. Don't go high level. Why did AT&T stock price drop? Why? Why did it drop? There you go, Joanne. People sold it. Now, why did people sell AT&T stock? Why? Why did people sell AT&T stock? Because they cut the dividend. You know, the same way I said, hey, no hard feelings, AT&T, but I have to find another player on my court because I'm down $250,000 in income that I've been consistently getting from you when you were paying me that $500,000. I'm down $250,000 because you cut your dividend. No hard feelings, but I'm gonna go find another player that's willing to pay me my income because I know I deserve it. Okay? Now, next, we talked about Dividend Aristocrat. As you start to look for your companies that you want in your portfolio, please consider Dividend Aristocrats. Now, let me tell you something about them. They are boring. You're probably not going to find a double-digit dividend yield aristocrat. But you will find a boring old company that consistently pays income, doesn't miss payments, and that's all they do. Boring old companies like a Coca-Cola. They're not going anywhere. They got a consistent, reliable income. So when people think about parking their money and not having to touch it but live off passive income, they're talking about things like Dividend Aristocrats. You're going to at least get 3%. At least. So you know what that means? One of the things I tell everybody, especially when you're in a passive income boot camp, is build your dividend strategy. Because if you don't have the roadmap, you don't have the strategy, you won't know which direction to travel. Now, the moment you decide to go somewhere, it may take you time to get to your destination. But in order to get to the destination, you have to have a starting point. And then you build a roadmap and you follow the roadmap to get you where you want to go. But if you guys don't get in the car, put your foot on the gas and at least go 5 miles an hour, you're never going to get to your destination. Some of you right now, are inside of a program inside the Wealth Builders community, and you are sitting in the car. You're not moving. Some of you got out the car because something in life distracted you, and you just left the car there. You just left the car there. Get in the car, put your foot on the gas, and go in the direction. You know what the direction means? Buying one share. Letting someone pay you something. Because if you don't start walking, driving, forget walking because we ain't walking, we're driving. If you are not driving to your destination, you are always going to feel like you're in reverse. Always. You're always going to feel like you're making money. You look up and you have nothing. Because the moment you make money, you make everyone else a priority. Everyone else comes first in your life. Amazon, your kids, like your mortgage, your car, everybody gets first dibs on your money. Yet you're the one working for it. So, making you a priority, paying attention to your money, finishing the program in the app, get to the destination, get the strategy. And it's possible that you're in that car going along your boot camp or your Read Accelerator, whatever program you're in, and you have to make a pit stop and ask for directions. You know what that means? That means you send us an email because you need help. That means you send us an email and say, hey, something's happening at home. I got to pull over. I got to take a break. You know, something happened in life. Something happened. I'm sick. I had a death in the family. I got to pull over. That's fine. But don't forget that you got a car running. Right now, you guys have made the investment to be in the app. You have put gas in the car, but you're letting it run every day and you're not driving. So it's okay to pull over. It's okay to stop and ask for help. But don't forget where you're going. Don't forget why you decided to be inside of this platform. Because this wealth cannot build itself. There's no president coming to save you. Not this one, not anyone. I don't care if they're white, black, pink, purple, male, or female. They're not coming. The banking system's not coming to save you. They're more interested in making money because of you. CEOs of these billion-dollar companies, they're coming up with more strategies to help you get more of their products so they can create bigger companies. It's business. So how about we take care of our business? How about we show up for ourselves so that we can show up for our families? So when you consider the investments that you're making, dividend stocks are an option. You're probably not going to get as much fast growth from them, but people like them because they're boring and they're dependable, and you don't really got to worry about the riffraff that you get with the market. They're going to pay you over and over, and you can live off that income. In the meantime, once you have your strategy in place, what you need to do next, you will realize, even I know this. I look at my dividend portfolio now and just all my stocks, right? And I realize I have some way to go. I'm trying to sustain my life. Do you know I go to Paris 2-3 times a year? Do you know that I like to stay in really nice hotels? Do you know that I like traveling the world to watch tennis? Do you know that I like nice stuff? Do you know that I want a mansion? I have some money to make. In addition, some money to invest to sustain my dream life. I'm not there yet. You might not be there yet. I'm not even there to sustain my life today, let alone my next level life. So I have work to do. You know what that means? I have to create more money. I have to create more. But before I create more, I have to at least know what to do with the money I have. All of you right now, whether you have a business, a job, you got something coming in. Do you have a strategy for the money you have coming in? Because if you don't have a strategy for what you have coming in, you think making more is gonna be easier? No, I'm gonna tell you now, and this is the honest to God truth. The more money you make, the more complicated it gets because you have to start to keep up with it. You have more responsibilities you have to handle. Now, granted, I love this life, but nobody told me how hard it would be. Nobody. Those of you who are entrepreneurs, you want to build businesses. Some people say, oh, I don't want a boss. I want freedom. Ladies and gentlemen, I don't have freedom. I just started to feel free, but it took me 10 years to get here. And I still work 90-hour weeks, and I'm not stopping because there's something bigger for me out there. There's a world that I have to change. The money's going to come, but at least create a journey that you enjoy because it's not going to be easy. It is hard. Creating a life that you want financially, beating the odds, becoming the 1%, being that person in your family, it is not easy. But I'd rather live this crazy life that I live than be miserable. I'd rather at least strive for the dreams that I want than not shoot my shot at all. Some of you aren't even taking a shot. Don't you think you're worth a shot? So yes, get the strategy in order. But after you got the strategy, ladies and gentlemen, you're going to have to lock in and figure out, oh, I got to make more money. How many of you have graduated the Passive Income Bootcamp, the Read Accelerator, members inside this app, and you've realized, all right, I see how this works, but I'm going to need more money. How many of you realize that? You've gone through some of the strategy, but you see, I'm going to need more money. Wouldn't you rather focus on creating more than complaining about what you have or what you don't have? Because the energy you're exuding to complain about what's wrong with your life, to complain about feeling behind, that energy is being wasted. You could put that towards creating more money. You've done the best that you could with the resources you have up until this point. But to do this next level thing you're trying to do, ladies and gentlemen, why would you don't have a blueprint. I said it to myself every day. I was on a call with Mahala today. I said, who we were a year ago, what we are trying to do now, I have never in my life ever done this before. But I'm going to figure it out because I have no choice. So make it your business to do what you need to do to figure it out. And at least just put your foot on the gas and keep going. Because I'm telling you, you can learn all this stock stuff, all of it. You are going to need more money. You're going to. You're not just going to flip your money every day in the market and become a millionaire. I don't work with billionaires, millionaires, all types of people. That's not how they did it. It takes time. And while you may feel like you're older, you're still here. Therefore, you do have time. Because I'm going to live to 150. And if I'm living to 150, so are you, and you need to believe it too. Okay? We don't have time to be complaining about no time. You have time and you are here. Take advantage of the time that you do have and make it worthwhile and start going towards the direction you're looking to get to. That's all. All right, now, after Dividend Aristocrat, and remember, those are those stocks that within 25 years or more have been paying a dividend and increasing it. You can see that in the dividend history. Next thing you want to consider is the dividend payout ratio. Now, this is where it gets a little tricky because there's different types of companies for different reasons in different seasons. So I want to show you something on my screen. Let me get out of this. The way you find a dividend history, you can honestly, the dividend payout ratio, you can Google it. I also like to look on Yahoo Finance. When you pull up the stock, you can see all things about the company. But there's a section that says statistics where you can see the dividend payout ratio. So let me pull up my screen and pull it up for you. The dividend payout ratio. Let me try to make this. All right, here we go. Let me share my screen with you. All right, so boom. Right here. All right. So I pulled up AT&T and can everyone see my screen? Jasmine, can you see my screen? Oh, wait, make it bigger or small? Okay, I'll make it bigger. Okay, hold on. Does that look a little better? Okay, cool. All right. So I pulled up AT&T on Yahoo Finance, right? So we see all these, so many things, right? On the left-hand side, you're going to see something that says statistics. Click statistics. When you scroll down, you'll see their financial information. Everything is public. But you're also going to see the payout ratio, which means of the money that this company has, this is how much they are paying out in income to all their shareholders when it comes to their dividend. Now, when it comes to the more established companies, that's not a bad thing, right? Look at it like this. This is the metric that indicates the proportion of the company's net income, the money they have left over, how much is paid to all of you guys. So let's take Amplify, right? Let's say we make our money, we pay our bills, we got money left over. I want to take 100% of our money to put it back into the business because I got to keep hiring and building and growing and doing more. AT&T is a lot bigger than Amplify, right? They're more seasoned. They're trying to get back on track because they removed some divisions that cut down their revenue and things like that. So their dividend payout ratio is 68%. 70% is kind of high, but not necessarily for a big old company like an AT&T. So when you look at, so this is a ratio you have to know, because that will tell you how much of their money that is left over goes to you versus to sustain the business. So here's a shot that I want to show you guys that kind of gives you kind of some idea. Stable blue chip stocks. So blue chip stocks are the blue chip in poker is the most expensive chip. Blue chip stocks are your biggest and best companies. These companies don't need to reinvest all their money like the way Amplify would. They prioritize dividends. Their number one priority, their main priority, I mean, say not number one, main priority is investors. So in this case, you're going to see some of these companies pay out 50 to 70% of their income to investors. Now, fast growing companies, less than 40%. Remember REITs, real estate investment trust. Remember, by law, they have to pay out 90%. That's the law. So the more established a company is, the higher that ratio. But that 40-ish range is not too bad, especially if they're still growing companies. So like in Apple, like in Microsoft, right? They're dumping billions in AI. They're dumping billions into growing their company. They're trying to make the company get bigger, not give all their money to you. So knowing that payout ratio gives you an idea of how much money they have to handle other things or their ability to reinvest more into the company. The more they give you, the less likely that stock price is going to rise drastically, because the company's price rises as the company gets bigger and it gets better. So for example, to give you context, Amplify last year, the previous 3 years from 2024 to 2020-ish, grew 712%. We are like a small growth stock right now. We are nowhere near AT&T. We are just growing drastically. At some point, we're not going to grow that fast anymore. But right now, we're trying to get as big, grow as fast, change as many lives as possible, because we're in a high growth phase. So all the money we're making, I'm not giving it to investors. Granted, we don't have any investors, but if we did, I'm not giving it to investors. I'm using that money to keep, to put it back into the business so we can grow even bigger. So knowing the dividend payout ratio is important. It can tell you a lot about the company. It can tell you a lot about the income that they're making. It can tell you a lot about how they prioritize you, how they prioritize their company. But every company that pays a dividend, just go to Yahoo Finance, go to statistics, and you'll see that payout ratio there to be able to help you. Okay? Now, the last thing is, when it comes to building your portfolios, is you. You decide what you buy based off what you're looking for. Are you looking for monthly income? Are you looking for long-term growth? Are you looking to reinvest your dividends? So I want everybody to take a second and just really think about, what are my goals? What are my goals for when I go shopping in the stock market? Just take a second and write it down. So I think about Ashley's goals, right? When I make investments, my goals are to make as much money as I can and take as much risk as I'm willing to make as much money as I can. So if I think about the average dividend yield in my dividend portfolio, it probably is like 9%, because I have a lot of I have a lot of money invested in double-digit dividend paying companies. Now, I have some like Verizon. I think I own AT&T too. They're not as high, but a lot of my REITs are. And I don't buy my REITs because I want to live off them. I buy my REITs because I want 15% dividends. I want to produce as much cash as possible. Now, when this cash is paid out to me, because that's how your dividends are going to be deposited in your brokerage account. When those dividends are paid out to me, though, I reinvest them. My niece right now makes an extra $400-$500 every year just from reinvesting her dividends. Now, we could take all the money, but instead I reinvest it. So just with dividend reinvestment, which is a drip feature in your brokerage account, you can turn that on for every investment that pays you a dividend, which means you don't have to capture the cash flow. I turn on drip. She makes an extra $400-$500 a year just from reinvesting her dividends. And every time she reinvests her dividends, it buys her more shares. The more shares she owns, the more income she gets. So every month when my niece gets paid, she's making more money every month because I'm reinvesting all the dividends. So if she owns 100 shares in one company and then drip is turned on and she buys and drip buys her 10 more shares, that means the next dividend payout, she owns 110 shares. And for every share that she owns, she's getting a dividend. So literally every month, all of you, if your drip is turned on, you should be making more money every single month. So yes, you have to go make more money, but when you don't take the dividend and you reinvest it, that means you're making more money with your eyes closed just because you turned on a feature in your brokerage account. So I encourage all of you, if you are not using the income, I encourage all of you to reinvest it. There's a woman, Danielle, who's taken our passive income bootcamp, Read Accelerator. She's been in our Wealth Builders Academy. She did not turn on drip because she used her dividends to pay off her student loan debt. So it is possible that you take the dividends that you're making, because it just gets cash deposited in your brokerage account. She took that to pay off her dividends. To pay off her student loans. And when her student loans were paid off, she turned drip back on. And so so I don't do that, but that's what she wanted her dividends to pay off her student loan debt. So it's possible to do things like that. But let's just say you don't have, you might have $100 a month coming in and you don't want to take the cash. You want to buy more shares. Turn on the drip feature. But when you buy your investments, consider what matters to you. I'll give you another example. I own stock in Apple. Apple pays less than 1% dividend yield. That's pennies. But I don't buy Apple because I want a big old dividend. I buy Apple because I want price growth. Apple produces more in price growth than they do in dividend. They're still growing. They're still investing. They're still one of the biggest companies in the world. I like Apple. Yeah, they pay some cash, but I like them because I want to invest and I believe in their stock price rising. But that's kind of like a hybrid stock where they pays a dividend and you have some price growth potential. Something like a Verizon, ladies and gentlemen, I'm not banking on Verizon turning into an $80 stock. That's just based off of just how boring it is and the history. I'm not banking on that. I mean, if it does, I'm happy, but I'm more so banking on the dividend and the consistency of their dividend. So when you make these decisions about what you buy, it's not always about the company being sexy. It's about, is it sexy for me? Does it match my goals? Do I like the boring, reliable dividend companies? I don't want the price going up and down, ridiculous. I like to know the check's clear on the day they say they're coming. I have some REITs. The checks don't always clear. Sometimes they cut the dividends, and I'm okay with that. But I know who I'm getting into a relationship with. Why? Because I looked at the stock price history. Why? I looked at the dividend yield. I looked at the dividend history. I looked at the payout ratio. I looked into these things before I made a decision to buy the company. So as you go through this journey, you're going to be excited to try to buy everything. I remember my mom, she still might. My mom owns like a whole football teams of stocks. And I'm like, Mom, you don't need all these companies. Like, I mean, thank God I'm her daughter. But I'm like, Mom, why do you own all these? Oh, I heard Rob mention this. I don't care what Rob says. You don't need a football team. You don't. And so I'm like, girl, get rid of this. Why do you got these things? Luckily, she's up, right? But That doesn't mean Rob is always right. Like, but you don't need a football team to get $1,000 a month in dividends. You don't. I wouldn't say just buy one company, but you don't need a football team. You don't need to buy every company that sounds sexy. Find your players. You need 5 players on a court to win a championship game in basketball. You don't need a whole football team to win. So find your players, own your players, believe in your players, look into your players every 90 days at least to just see how they're performing. See if the dividends have grown. See if the leadership has changed, the direction, like pay attention to those things. This is your life we're talking about. And while it might not be something you're used to doing, the people who have wealth, sustainable wealth, passed down to my kids' wealth, this is what they're doing. So even if your dividends are $50, treat it like it's $5,000. And really focus on that and accept the fact that, hey, I did not know this stuff before, but I am who I am today, and I'm ready to learn now. And no matter how hard it is or how uncomfortable it is or how new this is, I made the choice to be here, and I want to be here, and I deserve to be here. I've been waiting to be here. The dividends don't care the color of your skin. They don't. They don't care what you look like. They don't care your zip code. They don't care how much money you make. They don't care. As long as you are on record by that record date, the check will get deposited. They're not checking to see how many black people own the stock or who is a Republican or a Democrat. They don't care. So don't worry about those things. Focus on the players on your court. Get in the car, put your foot on the gas, and just go towards your destination. God forbid you don't get $10,000 a month. You only get 3. That's a lot better than the everyday person, and that's a lot better than what our friends and family have up until this point. Your family needs to see you do this so that they know they can do this. Your children are watching you. Your family is watching you. So give them something to watch. Shine your light, because I know you got it, despite how old you are, despite the mistakes you've made, and just tell yourself you could do this. Share by share, brick by brick. Okay? Are we on the same page? Is it? I just want to make sure it's not as complicated. So here's what we're going to do. 1, take a second, go through your notes, take inventory of what you have, make decisions on what you want, and I challenge everyone, the amount of money that you've committed to investing every month or every 2 weeks, I challenge you to increase it. Increase it, and increase it at least $10. That's it. I don't want you to overdraw your account, but I challenge you to increase it. And I'm going to check back in on you after this quarter is over, because the fourth quarter is the best time to watch the game. That's how we know who wins and loses. You still have time. You still have time. But if you just focus on, what am I going to do today? What am I going to do this week? Next thing you know, you're going to look up and you're going to be getting thousands in dividends. And trust me, there are members in this app that have done it. And if you are brand new and you just got here, you are in the right place at the right time. And I am the best version of a CEO that I have ever been, ladies and gentlemen. I am the most uncomfortable I have ever been, but I'm just getting started. And so are you. So I am proud of all of you guys. I love you guys. If you have questions, please send us an email. We are going to post this replay inside of the app. I recommend, times get rough, you get a little confused, replay this, send us an email, let us know you need us. It is okay to take a pit stop. Just don't leave the gas running in your car and the driver is no longer in the driver's seat. But it is okay to take a break. You are not penalized if life has happened. But if you let a year go by and you have not gotten what you needed to get out of this app and milked it for everything that's in here, we got to have a conversation with the driver of your vehicle, because the vehicle works good. We getting better every day. And there's nothing wrong with the driver. We just need to do some rerouting. That's all we got to do. So I love you guys. I am proud of you guys. And I am excited to build with you guys. And just let us know if you need anything in the meantime. And if I did not get to your question, please send me an email. Let me know, hey, I wanted to actually answer this question in this session. She wasn't able to get to it. Right now, send us an email, and I'll make sure that we get your questions answered. But I look forward to seeing all of you inside of the app. and let us know if you need anything. Bye, guys.